I have invested in PMS, how to judge the fund manager or the fund house, right? Because we saw the big popularity of PMS happen in the last 5 years. So we have created a very interesting 7 point framework. Obviously, there are a lot of content over here, but I'll quickly run through the 7 points, which will give you an idea about how we think about evaluating a fund house from a PMS point as a checklist. The first one is the depth of the investment team. What we want to see is whether the fund house is run by one individual or backed by a very capable investment team with a good research depth, right? Because it matters, right? Because if it's a one individual, right, I think that is a too much of a risk to carry to allocate a lot of capital. Because if you have to look at a mutual fund house, typically you will have one CIO, 4 to 5 fund manager, 20 to 25 research analysts. So it's the depth of the entire investment team is very wide. We don't necessarily need so much depth, but at least you need a capable people of 2 to 3 in the top so that it doesn't become a single man trick type of it. The second one is the business focus on the fund house, right? How many business the fund house actually focus on? Is the focus is only on the PMS? Then I think it's a big tick because as a fund house, they're very, very clear. They are into PMS. They're fully singularly focused or they are focused into multiple businesses, right? Which also tells you the interest lies in multiple areas and we need to be a little more careful on it. Not necessarily a bad sign, but we need to be a little more scrutinized if the fund house has a lot more objective, right, as an organization. Time over which the fund house is tested. Clearly, we see a lot of funds did very well in the COVID-led recovery, but that was a big bull market. Valuation re-rating happened significantly. The true test is to see the performance, how they did in last 18 months, how did they do previous to bull market. I think 7 to 8 year track record fund houses is where primarily you should look at. So when you choose fund houses, right, you need to ask the question, is the fund house have a 7 to 8 year to 10 year track record? Otherwise, you need to again have a higher level of scrutiny. The fourth checklist which we consistently want to follow is strategy integrity, right? Is the strategy is what they say and what they do, right? Because what we clearly see, having seen the funds, so there are close to 1,400 funds, right? We clearly see there are fund houses where there could be a slight difference in the way certain funds are matched vis-a-vis the benchmark or the nomenclature, right? So you need to really test it out. Is the fund is investing true to the label so that you compare a right PMS products to PMS product, right PMS product to MF to see whether post tax, post expenses, post the risk curve, which is little higher in PMS, does the result return commensurate what is being spoken, right? So this is the fourth thing. The fifth thing, we clearly see a very soft angle, but I think as a checklist for us, a distribution presence is there with the PMS because what happens, very few PMSs actually distribute and few PMS don't distribute, right? When we see a distribution will give you a little more credibility because the data is validated by the distributor. They have a better access to the information, which also gives you one level of due diligence, which otherwise becomes a very, very difficult to judge because end of the day, the entire the narration comes from the fund house and we need to be a little more careful as an investor. The sixth point is portfolio growth. Clearly, we have created a scorecard for every portfolio, even for mutual fund and for the PMS when it comes for review. And I clearly see once the portfolio is put in, the metric should be, it should have at least a 15% growth potential. Because I say, right, India itself is a 10% growth economy with a large cap expected to do 10 to 12%. A typical mid and small cap does between 13 to 15. So at least fundamentally, the portfolio should grow at 15 to 20. I would want to see more than 20 times, but at least 15 is a very good yardstick. So we have created a fantastic scorecard type of a metric for every PMS or every MF which comes for our review. And we share to our investors and give them our dispassionate view on this is your portfolio. This is what the growth to be expected. And it's up to us to see, right, whether it parts part of the portfolio or we should take any incremental action. The final one, as I've been telling, the fee structure should align with the long-term objective. We typically prefer a fixed fee model. And definitely today, we prefer clearly a fixed fee model over a variable fee because we clearly see post the consolidation, the forward returns have improved. We want our investor to actually allocate a lot of money only to a fixed fee product. So these are the 7 checklists. These are the preliminary one. I think We have a very detailed review mechanism for PMS, but we thought we'll just bring you a glimpse of how we think about evaluating, and that gives you an idea about how the house is thinking and operating on in respect to PMS.